popular features like augmented reality lenses and featured them in its own apps. Now, I asked Evan Spiegel about this. He said Facebook's moves are actually inspiring for Snap's designers. And here's what he said when I asked him whether he thought Facebook's behavior was anti-competitive.
I think there are some things that they've done in the past, that they could be perceived to be anti-competitive. Things like, limiting the reach of other, services on their platform, preventing people from using a snap code in their profile or something like that. And I think, services that have, reach as broad as Facebook are held to a different standard, obviously. So I think, we'll sort of see what happens over time.
I also asked him about privacy regulation. He says the key thing is making sure that privacy regulation doesn't favor the big companies that can afford the cost of compliance and disadvantage startups who don't have those same resources. He said that GDPR does seem to be working in Europe, and that could be used as a model. And he said, though, that fundamentally Snap is not as exposed to privacy regulation as, say, Facebook is. Back over to you. Boggy.
Julia, clearly the stock's performing very well today off the back of the interview. What aspects do you think were price moving?
Well, I think it was really interesting to hear from Evan Spiegel how their focus on augmented reality is going to really pay off in the future. He talked about how AR could be used not just for lenses on photos, but also for maps to create a really custom map experience. And, with the big business around sort of local advertising, you could see how that could be sort of the next generation of where classified ads go, creating a custom map with ads interspersed there. And it really sounds like in many ways Snap is diversifying. It used to be just about the chatting with your friends, and then it became about Discover and the professional content that they're using in Discover. And now they're thinking more broadly, not just about spectacles and augmented reality, but also about things like games as well as maps.
Julia, thanks so much. Julia Borstin for us. Up next, Elon Musk congratulating Ford on its new electric Mustang, tweeting, quote, "Excited to see this announcement from Ford as it will encourage other car makers to go electric too." We'll take a closer look at Ford's new Mach-E and discuss what it means for the Tesla and other electric competitors.
Plus, we're launching a new series this week on Closing Bell called Watch This Space. It's focused on the big bets being made in the space industry. And today we're kicking it off with venture capitalist Mark Baguette. That's coming up in just a bit. Closing Bell, we'll be right back.
I believe ETFs are a great way to invest in the market.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe it. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The handoff to Carson, slithers through the crease between the guard and the center. And
tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane to the rim, throwing right corner three. Another one.
TuneIn Premium brings you every minute of the NBA season so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
43 minutes left to go here, and the major averages are all slightly higher right now, on track for record closes once again. We could see a record close for the Dow, as I just mentioned. The number to beat is 28,004. Meantime, shares of Intelsat dipping in today's session after FCC Chair Ajit Pai calls for a public sale of C-band airwaves. Pai says public auction will allow the parties, all parties, to compete for this spectrum, which is being dedicated to 5G use. The alliance that's involved in this potential sale wanted to do it privately. Intelsat is part of that alliance. You can see right there, shares are down at 44% right now. Before this move and before they were halted twice earlier in the session, the stock had lost 50% over the past week. We'll have more on this in the next hour and all this week in our new series, Watch This Space. We've got a big lineup of guests, so stay tuned for all of those interviews.
Moving on, Ford's iconic Mustang getting a refresh with the unveiling of the new electric Mach-E. Phil Bowe joins us now with the details. Hi, Phil.
Hey, Wilf, right now dealers from around the country for Ford are getting briefed on details about the Mustang Mach-E. A couple of numbers stand out with this vehicle. First of all, the range when fully charged up to 300 miles. The estimated starting price when it comes in next year, it's going to be around $44,000. As for putting the Mustang name on an electric SUV, Ford's chairman says this is the right move for Ford right now.
This is a very strong signal of where Ford is headed. That's why I felt it was important ultimately to lead with our strongest name, and we're going to follow it up with an F-150 that's electric. And it also galvanizes our team. If they know that they're working on an electric Mustang, they better not screw it up. They better get it right.
Well, we'll find out if they get it right when they actually start deliveries of this vehicle late next year. This is what it's all about. Sales of electric vehicles in the U.S. this year dominated by Tesla, which basically sells about 80% of the vehicles. Then you see GM, Nissan, and Volkswagen. They pretty much have the remainder of the sales that when it comes to electric vehicles. Don't forget, as you take a look at shares of Ford, this vehicle deliveries will start late next year. Why is that important? Guess what other electric vehicle is expected to hit the market late next year? It's the Model Y, an electric crossover from Tesla. As you take a look at shares of Tesla, also remember that Elon Musk will be showing the company's first electric pickup truck. That happens out here in L.A. on Thursday night. Guys, back to you.
Phil, I'd love to focus on the fact that Idris Elba was the person behind the launch, but I won't. And instead,
they once worked at the Ford plant in London.
Oh, is that the reason? I didn't even see the reason why. I just saw you tweeting about it yesterday.
Yes.
Okay, well, that is legit.
Yes,
there we go. But Phil, the thing I'm not even really that surprised that they're using the Mustang brand for a new electric car. One can understand the way that evolves, but it's odd to use the Mustang brand for an SUV, or what's supposedly an SUV. Is that a risk that doesn't cross over and literally cross over moving forward, or does it dilute the value of the Mustang brand itself?
Sure. Go on social media today. There's no shortage of purists who are saying, this is not a pony car. This is not a muscle car. It can't be a Mustang. Ford will take that hit, whatever hit you want to consider on social media, in exchange for the number of people who will say, Mustang, electric SUV? Let me go check out what this is all about. Cuts through the clutter instantaneously. And it's not like they just slapped the pony on a pretty makeshift vehicle. This is a vehicle that I think is going to do well if it's priced accurately in that mid-$40,000 range.
Phil, thank you very much. Similar to Aston Martin trying to launch an SUV. We'll see if that works. Also, doesn't feel right to me. But anyway, Phil Bowe, thank you.
Meantime, Tesla has pitched its electric pickup to the military as well. We'll see what kind of comments come out of that event later this week. Up next, Piper Jaffray out with its teen holiday wish list, and some of the brands that made the cut might surprise you. The analyst behind that note joins us next.
Plus, FedEx challenging the publisher of the New York Times to a debate after a story this weekend claimed The company cut its tax bill to zero without making good on its investment promises. We'll ask the reporter behind that story how he feels about FedEx's fiery response.
At Lidl, we're big on those little reasons to be jolly, like our delicious Favorina all-butter mini Stollen bites for just $1.99 and 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off to Carson, slithers through the crease between the guard and the center. And
Tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now. Hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Welcome back to Closing Bell. It is time now to get to the word on the street. Piper Jaffray revealing Generation Z's wish list for the holidays in its latest survey. Money and clothing came in as the top 2 wishes, while Apple, Nike, and Louis Vuitton came in as their top brand picks. Let's bring in the lead analyst behind the note, Erin Murphy. Erin, thanks for joining us.
Thanks for having me.
All right, so give us the full results of this survey and what it means as we go into another holiday shopping season.
Yeah, so we did this survey with Gen Z. The average age was 16 years old. And what we asked them is what they want for the holidays. So it's a very broad, open question, no aiding involved. And what was really interesting is the number 1 and 2 responses were pretty unchanged from former surveys. Teens want money and they also want clothing. But when you dig a little deeper and you look at the brands that they're citing, the number 1 brand that is being cited is Apple. AirPods were a very popular item on the wish list this year. And then number 2 was Nike. Nike actually tripled share relative to where it had been last year. Rounding out the top 3, Louis Vuitton, which was a big surprise to us, but that came in as the number 3 preferred gift for the holidays.
So, Erin, I was going to bring up the fact that number 1 on the list was money. That's always the case, is it? Like 15-year-olds are saying for Christmas, I want money. I mean, that's always the norm, is it?
It's been either number 1 or number 2. If you went back over the last 5 years of looking at wish lists, they ask for money. I guess they want to spend it on whatever they want. It's either been in the top 2 places. So it wasn't too big of a surprise. I think it's more interesting when you start looking at some of the brand details of what brands teens are actually citing.
Mark, typically what you see is you see a lot of the retail stocks or consumer discretionary stocks start to rally in November ahead of the holiday season and then maybe sell off or at least flatline in December. Is that what you would expect this year? And based on some of these results, I mean, are these names you'd be considering?
Yeah, so the Louis Vuitton thing, that one baffles me. I mean, I've got a 7th grade daughter, and there's no, Cam, I'm sorry if you're watching right now, you're not getting a Louis, okay? We got to take that one off the list. Apple, I believe it, right? Because AirPods that's a big thing. Everybody wants them right now. Lulu, that's one that I didn't see on there. I'm very surprised about that one. I'd expect Lululemon to really sell a lot of stuff during the holiday season. I mean, typically what you see this time of year is you see that the beginning of November is kind of rocky with these retail stocks. And then right when you get to Thanksgiving, they take off until the end of the month. First week of December is rough, and then they zoom into the end of the year. That's typically what you see.
Aaron, any insights between online and offline and what's influencing these kids as to why they want what they want?
Yeah, so we asked another question. This was a little bit broader, looking at the U.S. demographic holistically. We did a pulse survey over the weekend talking to 1,000 U.S. consumers. What was interesting about the online versus offline dynamic is when we asked them how much of your Christmas or holiday shopping do you intend to do online, it was 46% of their overall shopping was intended to be online this holiday. So we think it will be a very strong online specifically. Again, remember that calendar this year between Thanksgiving and Christmas, it's 6 days shorter versus last year. So there's a much more consolidated period to actually be in store. So we do think online will still be the winner.
Aaron, thanks so much for joining us. Good to see you.
Thank you.
I'm a little surprised, Morgan, that Mini Brand's 4-cheese pasta didn't make it onto the list.
Shucks.
Oh, it's a great surprise. Anyway, there we go. Aaron Murphy there. We've got 32 minutes left of trade. We're on record close watch again. We should remind Mike of that. He missed the point on Friday. Here are the key things driving the action. The mood in Beijing about a possible trade deal with the U.S. has turned pessimistic, a source has told CNBC. That trade uncertainty weighing on oil prices and bond yields today. And Fed Chair Jay Powell met at the White House with President Trump this morning. Powell said future decisions will continue to be made on a non-political basis. We are up 26 points on the Dow.
It is time now for a CNBC News Update with Bill Griffith. Bill.
Hello, Morgan. Here's what's happening at this hour. Secretary of State Mike Pompeo announced a little while ago that the U.S. is softening its position on Israeli settlements in the West Bank, the latest in a series of Trump administration moves that essentially weakens Palestinian claims to statehood.
After carefully studying all sides of the legal debate, this administration agrees with President Reagan. The establishment of Israeli civilian settlements in the West Bank is not, per se, inconsistent with international law.
The Supreme Court has denied Martin Shkreli's request to hear an appeal of his criminal conviction for securities fraud. The rejection means that he will have to serve out the remainder of his 17-year prison term and forfeit more than $6.4 million. And Alabama quarterback Tua Tagovailoa underwent successful surgery on his injured hip today. He dislocated it against Mississippi State on Saturday, and while he is out for the year, he is expected to make a full recovery and be ready for next year's NFL draft. Sorry that he won't be around for the rest of the season. The tide has been rolling. By the way, Wilf, when you have children someday, you will learn. You'll get lots of texts that say, send money. Whether it's Christmas time or not.
Maybe it's sure, I can get, trust me, I sent those texts myself, but not for Christmas.
Well.
As a kid. Otherwise, Christmas would just be like, let's all exchange cash, net out, no one does anything, and it's nothing.
Get your Venmos out and let's have Christmas,
right.
Shall we?
Let's make use of the free transfer tool and net it off to zero.
There you are.
That would be fun.
Happy Christmas.
Bill, thank you. Merry Christmas to you as well.
Bob Humbug.
Let's get over to Mike for his second market dashboard. Hey, Mike.
Hello, Wilf. We're going to crown some undisrupted champions of the stock market. Actually, investors have already done this. There's 4 stocks. They're sort of bundling together as a new class of these companies that are at one point were considered to be vulnerable to some kind of disruption to their core business. But now the market has seen their strategy pivot into the digital age, and they've endorsed it with a higher valuation. So I like the synchronicity here. So this is Disney, Walmart, Nike, and Starbucks. All of them up over the last 12 months between 23 and 27% compared to 14% for the S&P 500. Obviously, this is just one stretch of time, but it's interesting that the market has gravitated over here and take a look at some of the key points I would guess that we need to highlight here. One is, if you looked at Disney and Walmart last week, I think it was very clear that the market has said they've figured it out. Disney with Disney Plus, the huge response we got to that. And then Walmart's quarterly results were very consistent with this idea that they've reinvented their business in the correct direction. Now, they had this premium valuation. These stocks are now 40 to 50% premiums to the S&P 500 in terms of forward multiples. So they've already been given a lot of credit for having sorted all this out. Nike and Starbucks, slightly different, but I do think that their direct-to-consumer digital and mobile strategies are very much key to the premium that they have. So the question now is, does the market have this right? This is a branch of the buy quality, buy traditional growth stocks for safety, for buybacks, for dividends, and all the rest of it. But it also seems as if they've now kind of been elevated to this anointed status as these companies that have disrupted themselves and can, for a very long period of time, succeed in that. But we'll have to see, because earnings growth for a lot of these companies is not really supposed to be that exciting for the next year or two.
Mike Santoli, thank you.
All right, thanks.
Mark.
Yep.
Do these sort of tried and true consumer names warrant a greater valuation based on their own disruption of themselves?
I think they do. I mean, so we own Disney and Walmart, right? So obviously Disney, the Disney Plus response was great. What is it, 10 million on day one? Maybe another couple million after that, right? So I do think Disney is transitioning their business model, so they do deserve that premium valuation. And you saw it as soon as they announced Disney Plus, the valuation went from like a 16 forward multiple to 24 almost overnight. Walmart's another one where as the economy slows, more and more consumers trade down. So you have that trade down effect. They're doing everything they can to drive volume because it is such a low margin business, from curbside pickup to delivery. So those are the two that I like the most out of the list that Mike mentioned there.
Walmart's up 1% or so today. After the break, we'll dive into a new report detailing how Americans feel about banking with big tech on the heels of Google's foray into checking accounts.
And as we head to break, here is a check on bonds. Yields slipping to start the week on the back of uncertainty surrounding China trade. The 10-year yield sitting just above 1.8%. Closing bell. We'll be right back.
The Bond Report is sponsored by PIMCO.
I spend way too much of my life in my car to drive something boring.
With the kind of work I do, I need the utility of an SUV, but I want the beauty of a Jaguar.
The E-Pace.
How Jaguar
makes a compact SUV.
For special offers, check out the Unwrap a Jaguar sales event going on now at your Jaguar retailer.
How do we make the future of energy ours? By knowing who we are, where we're going, by remembering the roads we've traveled, while developing new paths of our own. At American Electric Power, we're working to generate new ideas and empower possibilities for us all. Shaped by who we are, where we live, and what we value, the future is ours to hold.
When we chose independence, it was like discovering newfound superpowers. Constraints went away. Commissions on proprietary products went away. Barriers to doing the right thing went away. As a fiduciary, I'm acting in the best interests of my clients. It becomes a way for making good things happen. For us, no other way makes sense.
Charles Schwab is proud to support more independent financial advisors and their clients than anyone else. Visit findyourindependentadvisor.com.
Brian Sullivan, Worldwide Exchange, 5 a.m. Eastern on CNBC. Tomorrow on Squawk Box, Yum Brand's former CEO on new fast food trends and tastes, plus Home Depot's quarterly results and analysis. Tomorrow.
This is Kate.
Hey.
She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance, but she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
I finally got to start my career. Except that I was spending thousands of dollars on interest on my student loans and I needed to refinance. And then I found Credible.com. Within just a few minutes, I had actual rates from lots of lenders. Now I'm saving thousands of dollars, and I'll be out of debt much sooner. And I can focus on my future. It was so easy, I wish I had done it years ago.
Visit Credible.com to see how much you could save on your student loans.
Welcome back to Closing Bell. Would you bank with big tech? According to a new report, more Americans are willing to give it a try. CNBC's Kate Rooney has that story from San Francisco. Kate.
Hey, Morgan. Despite the data and privacy issues surrounding big tech lately, people are open to banking with them. According to a new report out from Bain today, 62% of U.S. respondents said they would buy a financial product from an established tech company. The average was even higher for younger people. Roughly 75% of those 18 to 34 said they would be willing to bank with a tech giant. Not the case for baby boomers, though. Only 32% of those 65 or older said they would choose Silicon Valley over Wall Street. The study highlights Google, Apple, and Facebook's potential reach as they get into consumer finance. I spoke to the author of this report who said consumers are looking for digital-first options, regardless of whether they come from a bank or from a tech giant. He's also predicting more partnerships like Citigroup and Google and Goldman Sachs and Apple going forward.
Okay, I don't want to overcomplicate things, though, as the banking reporter, forgive me for doing so. But
yes,
did we
this is your turf, absolutely.
In the way we expressed the question, a difference between would you do it if it was not FDIC insured and the deposits weren't protected by the government, et cetera, et cetera. I'm sure we didn't, is my point.
Right. It's interesting, too. So the tech company in this instance is a consumer-facing name, but most people might not think that even if you're banking with Google, you're actually banking with Citigroup. You always have that FDIC insurance, so there's definitely some interesting things in the background, but the author of this report mentioned the bank partnerships and said that these guys, everyone's going to sort of scramble to find a dance partner, as he said. So those that don't have a big tech brand going forward might struggle, especially if they don't have a good digital strategy.
Kate Rooney, thank you. And Wilf, just to bring this full circle for you, I mean, going back to our previous discussion about Gen Zers wanting cash during the holidays, there you go. The tech companies are looking to capitalize on that.
Exactly. And Christmas will be ruined forevermore if we all just give each other cash. Anyway, Kate Rooney, thanks so much. We've got 22 minutes left of trade. We're on pace at the moment for a record close to the Dow, not quite for the S&P, just for the NASDAQ. Up next, we've got your last chance trade.
And later, shares of biotech Karuna Therapeutics are up more than 400% in today's trade alone. We're going to tell you why. That's coming up. Flight number 4.
At Little West, big on those little reasons to be jolly, like our delicious Favorina all butter mini Stollen bites for just $1.99 and 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always little on price. Subject to availability, selected stores excludes NI.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I wish me a Merry Christmas. I wish me a Merry Christmas. I wish me a Merry Christmas and a Happy New Year.
Don't forget yourself this Christmas. Get 90 gig of data for the price of 30 on the stunning Samsung Galaxy S10 Plus. Search O2 Christmas deals.
O2 Refresh Credit by Telefonica UK Limited. Contract eligibility and terms apply.
Along the goal line, Martin scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Ah, finally another commercial, said no one ever.
Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations. Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Welcome back. 18 minutes left of the session. Mark, what are you going for? Last chance trade time.
Yeah, so we're going with Blackstone here. So Blackstone is the largest private asset manager in the world. And when you look at stock valuations, when you look at bond yields right now, it really makes sense to consider alternatives in your portfolio. So individual investors over the course of the last several years have begun to throw away their old 60-40 strategy of 60% stocks, 40% bonds in favor of more of a 50-30-20 strategy, where they're allocating about 20% towards alternatives. And when you look at endowments, so institutions, right? So from 2002 to 2018, equity exposure has gone from 50% all the way down to 36%. Fixed income exposure has gone from 23 down to 8%. Alternatives have gone from 24% all the way up to 53%. So money continues to flow into these alternatives. There's fee compression across the entire asset management industry, but it's not hitting alt managers, and this thing's paying a 3.6% dividend.
So the pushback, I guess, would be, could all of that now change to affect this industry, whether it's the fees come down, the fact the stock price has already had a fantastic run in the last 6 to 12 months, the fact that private market valuations to which this is geared are high, real estate valuations to which this is also geared already high.
Yeah, I mean, there certainly could be some sort of mean reversion, but I do expect money to continue to flow into these asset classes, right? I mean, you have to look at the cost of capital, right? And where is the best place for you to allocate it right now? Is it in stocks, which might be trading at an 18.5 forward multiple? Is it in bonds that are paying a 1.8% yield, right? So I still think there's more value in these private asset managers.
One expert view on Blackstone today, Mark Tepper. Another one a week today from Steve Schwartzman. He'll be joining us here in Closing Bell, so make sure to tune in a week's time.
All right, meantime, it is 17 minutes to go until the closing bell. We are on record close watch. I feel like we've been saying that a lot lately. Up next, we'll bring you uninterrupted coverage of the final minutes of trade, and the Market Zone is next. We're going to be right back.
At Lidl, we're big on those little reasons to be jolly, like our delicious Favorina all butter mini Stollen bites for just $1.99 and 6 deluxe mince pies for just $1.35. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores, exclusion I.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you. In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Hey, NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Haskell gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
With 13 minutes left in the trading day, both the Dow is higher by 12 points and the S&P is down just fractionally, down by a point right now. We are on record close watch. We are in the closing bell market zone. Commercial-free coverage of all the action going into the close.
CNBC senior markets commentator Mike Santoli is here to break down these crucial moments of the trading day. And today we've got Mark Tepper from Strategic Wealth Partners as well. As Morgan just mentioned, we are on track just for record closes on the Dow and the NASDAQ. S&P just lower. Let's kick things off with T-Mobile. Julia Boston has a story for us. Julia.
Well, T-Mobile shares now back in the green after dropping this morning on news that CEO John Legere will step down at the end of April and will be replaced by President and COO Mike Sievert. This comes as T-Mobile battles to close its $26 billion merger with Sprint, which is expected to be completed next year. Now, Legere denied reports that he was having discussions to replace WeWork's Adam Newman. He said this transition, quote, has been under development for a long time in a tweet he sent today. Guys, back over to you.
Julia, thank you. Mike Santoli. On top of that, we had Peter Adderton, the founder of Boost Mobile, come on Squawk Alley today, make a pitch, make a bid for the divestitures of Boost that are supposed to go to Dish right now. So It just seems like, in general, and with state regulators still looking at this merger, this is not a done deal. And there's a lot that could happen between here and next year.
It's true, although whether it happens or not, I think the companies and the industry go into a different phase. It's not the pure marketing-driven story. It's obviously a lot of integration and getting over the legal hurdles and all the rest of it. So I don't think the market is pleased to see Legere go, but I don't think it's that surprising given where the companies are.
I'm interested if we go back to the intraday chart. I mean, when this was potentially he was leaving to go to WeWork, T-Mobile stock suffered quite a lot. Then it kind of got confirmed he wasn't going to WeWork. The stock recovered, and it's not now falling again, albeit it opened lower on the back of the news that he's leaving. So the market's obviously taking it in its stride more than perhaps a couple of weeks ago.
If it got used to the idea, and perhaps if the market is absorbing this notion that it was a planned, succession as opposed to he's jumping in an abrupt way to go to somebody else.
All right. Hong Kong tensions heating up over the weekend, and that's having an impact on Macau casinos. Let's get to Contessa Brewer for more on this. Contessa.
Note from Jefferies today estimates that November gaming revenues are declining even more than anticipated, as much as 13% lower than November last year. And the analysts say it's in part that prospective travelers are canceling trips to the region amid the conflict in Hong Kong. It's the city's main gateway to Macau. Now, Wynn, Las Vegas Sands, and MGM largely have downplayed the impact of these protests, but VIP daily volume is off more than 30%. And growth is slowing in the mass gaming sector as well. Shares of Wynn right now are actually up 2%. Melco's up 1.5%. It's Las Vegas Sands that's off by 1% today.
And Contessa, for any non-Chinese visitors to Macau flying in, you have to fly to Hong Kong first, right?
That's right. And the airport has remained open. But listen, roughly about 85% of the visitors to Macau come from mainland China and from Hong Kong. So that's really where their traffic is coming from. And if you've got some trepidation on that front, it's likely always going to affect Macau.
Contessa, thank you very much for that. 9 minutes left. Let's move on to Snap. CEO Evan Spiegel sat down with CNBC's Julia Boston earlier today and weighed in on the rapidly growing popularity of social media site TikTok.
Snap and TikTok are so different, and we actually consider them a partner. So they're an advertising partner, they're a SnapKit partner, meaning that TikTok content gets shared through Snapchat so people can discover it more easily. But the services are very different. Snapchat's really about communicating with your close friends, and it seems like TikTok is more of a popularity contest.
Mike, I thought really fascinating that not seeing them as a direct competitor and being much more confident and optimistic about the other main competitor, Facebook and Instagram stories. And clearly the stock price today is rewarding those comments in general.
I guess, years of coexisting with those things probably has given them a little bit of security about their Snap's place in this market. I think he's probably correct, by the way, about TikTok in terms of how it's used and how it differs. But eyeball hours are eyeball hours. So if you do have a lot of new fads coming along that are stealing engagement away, I guess short term it takes a hit from Snap.
Mark, you're invested in Facebook, not Snap. You feel like you missed out?
I wish I would have rode that thing out for the 150% gain so far this year. Unfortunately, we left it behind. So our issue with Snap is that they're doing really well in that 18 to 34-year-old age range, but they're struggling with the 34-plus crowd, the crowd with the deeper pockets. I do think their biggest competitor would be Facebook or more specifically Instagram, so we'd much rather be there.
7.5 minutes left in the session. S&P just lower, down, Nasdaq just higher. Let's move on to home builder sentiment, which edged lower for the month of November. CNBC's Diana Olick has a summary. Hi, Diana.
Hi, Wolf. Yeah, but the big builder stocks shook it off, up big on the day and up over 50% year to date thanks to lower mortgage rates and despite that unexpected drop in builder sentiment in November. The NAHB's confidence index dropped 1 point to 70, the first fall since last June, but well above a year ago, and anything above 50 is positive anyway. Current sales conditions fell 2 points to 76, buyer traffic off 1 point to 53, and sales expectations over the next 6 months, they rose 1 point to 77. Sentiment and stocks are high because mortgage rates are low. Back to you guys.
Diana, thanks so much. Mike, we've discussed this quite a few times in the home builders, but even though the curve has steepened a little bit, that has helped things like the banks, it hasn't steepened so much to hurt the home builders.
No, not at all. In fact, I mean, the 10-year is pretty much what it's geared off of, and that has not gotten escape velocity, in fact, down a fair bit in the last couple of weeks. So I do think that's supportive. Just the general notion that one of the stronger parts of the landscape is domestic consumer and all the rest of it. So it makes sense that they're trading this way. I don't know that it's off to the races for the home building sector. It's pretty well discovered right now that it's a strong part of the market.
Your thoughts on
yes, so I like D.R. Horton here, right? So when I look at affordable home inventories, existing homes that are out there on the market, there's not a lot of inventory when you look, in that maybe $250,000 to $500,000 price range. That's what D.R. Horton specializes in, is building those affordable homes.
All right, meantime, Levi Strauss stock is down about 1% today. Stock has underperformed the broader market since its IPO, but our own Jim Cramer sat down with Levi's CEO Chip Bergh today and talked about what differentiates Levi's from other retailers.
Consumers want to come into the store and they want an experience. They don't want to just come in. If they're just going to come in and transact, they can do that online. But they want to come into a store and have an experience, something that's unique, something that's Instagrammable. And we've got tailor shops in most of our mainline stores around the world where we do personalization and customization.
And don't miss the full interview with Levi's CEO Chip Bergh on Mad Money tonight at 6 p.m. Mike, I mean, we've seen so many of the companies that went public this year sell off since their debuts, including Levi's. Does it belong in this batch of newly public
Yeah, I don't think it quite fits with the narrative of companies that stayed private too long, that took on too much capital, that were less software oriented than we thought, like Uber, for example. So not quite, although I do think it shows that the appetite for a brand new, fresh name, even with an old brand attached to it, is not really that strong, at least right now. A new stock, but an old business is something that the market didn't know what to do with.
So the one thing that he mentioned was that consumers want an experience. And I believe that. But if consumers wanted an experience, then Nordstrom would be performing better. The stock's down like 20% this year. And when I think of providing an experience to the customer, I think Nordstrom does it best, right? So if they're not successful at it, I don't know how Levi's is going to do much better.
Oh, interesting to hear you say that. I'm more of a 40 carats frozen yogurt type of girl, so I go with the Bloomingdale's as a consumer.
Oh, yeah?
I can eat and shop and feel really good about myself. Okay, shares of Karuna Therapeutics are up more than 400% in today's session. Meg Terrell has more on this. Meg.
Hey, Morgan. Well, potentially game-changing therapy for people with schizophrenia. That's how Citi put it in a research note on Karuna Therapeutics today, noting the company's experimental drug provided strong efficacy in a mid-stage clinical trial while sparing patients from safety issues that come with currently approved antipsychotic medications. Now, the more than quintupling in Karuna's stock price on the back of these results gives the company a market value of more than $2 billion. The drug still has a ways to go before it could reach the market, though. Karuna says it aims to start a larger trial of the drug by the end of next year. Guys?
So Meg, clearly 400% rise, 2 billion market cap now. How big is the market for this type of drug?
Analysts are putting multi-billion-dollar potential market previews on this drug. If it's approved, it has to get through phase 3, of course, but it is a large market. Millions of folks have schizophrenia, and often they are not well served by what is already on the market. They have bad side effects, so more drugs are needed. So it could be a multi-billion-dollar drug, but phase 3 is traditionally very hard for drugs in this category. The placebo response can often be very high, so it's hard to show benefit on top of that. So it's really going to be a tough road ahead, but clearly investors saying this is way better than they expected today for this drug.
Meg, thanks so much for that. Moving on, we've got 2.5 minutes left to trade at the moment. The Dow just positive. Mike's been looking at the market internals.
Yeah, well, kind of mixed. If you look, I mean, a flattish index performance, and then more stocks are down than up. If you look at the New York Stock Exchange, Brett, it's been kind of a steady pull lower in terms of the average stock out there, with the exception of Friday. I would also take a look at the new highs and lows on the NASDAQ, because the number of new 52-week lows on that exchange has been kind of stubbornly high. Here you have over 100 stocks again hitting new 52-week lows with the index at a high. I wouldn't say it's a red flashing light, but it's something to be focused on. Then momentum versus value. A lot of noise about value coming back. Look at the last 10 days. Momentum completely reasserted itself, outperforming value again.
We've got less than 2 minutes left to go here. Let's send it over to Rick Santelli for a check on bonds. Rick.
Well, Morgan, if you look at an intraday chart of 30s, they were the best performer with regard to melting the least. Close to unchanged, only down 1 basis point. The rest of the curve down 2 basis points in very tight ranges. Pound versus dollar. All the Brexit polls look as though maybe a plan is actually going to be passable, and we'll see a real Brexit after the December vote. It made the pound versus the dollar intraday trade up to, well, let's look at it this way. On this long-term chart, you see the last high there, 1985, 129.84. Today's high was one tick above that. It looks like we're getting close to breakout. Bertha, boy, did it hold the 85 lows and make a comeback.
Yeah, it did. We are going to be closing here, it looks like, at a fresh all-time high. Among the stocks making new highs today, NVIDIA. That's a big bounce back after some disappointing guidance from the company last week following its earnings. New 52-week high, still 25% below its 2018 all-time high. Among those still well below their all-time high, Amazon. Take a look at the difference. Apple and Microsoft at new highs today, new historic highs. Amazon still about 14.5% below its all-time high. And below the radar, take a look at Peloton today. It actually finally climbed back above its IPO price, now at 30. Bob, over to you.
Flattish day, Bertha. Keep an eye on the big picture. When you have the equal weight S&P 500 and the market cap weight S&P 500 hit new highs at the same time, we hit value and growth hit new highs at the same time, and you've got cyclical and defensive names like tech and consumer staples hitting new highs. Broad rally in the markets, even though you have a flattish day with the S&P 500 essentially ending the day up 1 point, the Dow up 28.
Welcome to the the closing bell, everyone. I'm Wilfred Frost.
And I'm Morgan Brennan in for Sarah Eisen, along with Mike Santoli, CNBC's senior markets commentator.
Let's check in on where we finish. As you can see on the right-hand side of the screen, record all-time closes for the three major averages, albeit only fractional gains today, 29 points or 0.1% for the Dow. S&P just getting positive in the final minutes of trade to join in as well.
And joining us to talk about the market day, Mark Tepper, founder and CEO of Strategic Wealth Partners, is still here with us, along with Mark Lucchini, Chief Investment Strategist at Janney Montgomery Scott. Triple M's on set here today. Mike Santoli, I'll start with you. The fact
and an upside down M.
Yeah.
There we go.
So I guess it's quadruple. Okay, anyway. Mike Santoli.
Yes.
Fresh record highs for all the major averages, albeit just barely.
Just slight. I mean, obviously, it's a little bit of an upward drift or a trudge. It's not as if people, came into today and said the market's at a record high, and I'm either really excited about that or I'm really spooked by that. That's probably a positive. Also, the market declined the opportunity to sell off on what seemed like some adverse trade talks news this morning. I think that shows the stakes are getting lowered as long as the market remains fixated on if we don't re-escalate the trade war, the market's probably okay. I'm still watching for sentiment to get a little bit too toppy. Maybe we're getting there, but not quite.
Mike, from here, are we more likely to go up 3% or down 3% next?
You know that I don't think there's much of an edge in that call. I think you'd have to give the advantage to up. But I don't think either one should be surprising. To me, the more interesting thing is if you're down 3%, you're still in an uptrend. By that magnitude of a pullback. So that's probably your better takeaway.
Mark, is this just all about trade now? Is that what's dictating market moves?
I would say yes, but I think the market really made a statement today in not selling off, given the fact that there was kind of a pessimistic outlook from China on whether or not this phase one deal was going to happen. But I do think phase one is pretty much completely priced in. I do think you have to see a phase one deal. I don't know that China right now has the incentive to get it done that they did a couple weeks ago. I think Elizabeth Warren slipping in the polls is causing them to rethink their strategy. But yes, I do think trade is it's front and center.
Mark Lucchini, what do you think about this market right now and how dominant the trade phase one possibilities are to the moves we've seen?
Well, Morgan, I think it's undeniable that it is dominant, certainly. And should we see that perhaps, which is a movie we've seen before play out, where there's some relapse in the talks relative to actually getting this phase one down payment on the negotiations, that would certainly clip the market pretty well. But at the same time, obviously, we have the seasonal factor here where the setup is for a Santa Claus rally into year end. There's the FOMO principle that's alive and well, and we know a lot of investors are either underinvested or have been on the wrong side of the trade so far this year, and so there's a bit of a catch-up phase to be had. And in addition to that, and I think importantly, including China but beyond as well, is just indications that growth abroad is beginning to stabilize. They're still tentative, they're not uniform, but I think collectively we're starting to see enough positive signs that improvement is at hand. And if that's the case, that'll go a long way to soothing fears that the backdrop for corporate earnings, particularly for U.S. multinationals, is going to weaken. Instead, perhaps it bolsters the case that 2020 earnings expectations, which are still expected to be up over 8.5% year over year, can be realized.
Fed Chair Jerome Powell met earlier today with President Trump and Treasury Secretary Steven Mnuchin. Let's bring in Steve Leisman. Steve, I guess unscheduled this meeting, but not wildly unexpected for this kind of thing to happen.
No, they talk from time to time. Presidents and Fed chairs talk from time to time. This is their second meeting this year. They've had 3 other phone calls, according to records from the Federal Reserve. So, I think the context, though, Wilf, is are the tweets from the president that are sharply critical that makes a meeting kind of curious. It makes a lot of people want to have been a fly on the wall to have listened to how it went down.
Mike Santoli, in terms of a meeting between the two, I mean, we know the Fed chair has said that, things are on pause, they're data dependent right now. Yeah. What do you think that conversation potentially looked like?
Obviously, from his side, I think we know what it looked like. From Powell's side, we know it was a reiteration that this is the way we see the world. I do think that when the president followed up the news of this meeting with a sense that it was a cordial meeting and didn't actually lash out with any kind of hostile comments about the Fed chair, that might have kind of dialed down the temperature a little bit in terms of people's response to it. But I do think that, both sides have their positions staked out. We know what they are.
So, Steve, presumably, even if the president still in general tweets to suggest or in speeches suggests he still wants further cuts or even flirts with the idea of negative rates, he must be pretty happy by the pivot he's seen and content with the data of late.
It's hard to know, Wilf. I would not impart those emotions to the president, given what he said publicly or said in the tweets. I think it's fair to say that Republicans in Congress, judged by the testimony last week, are certainly seem to be have not a lot of objection with where the Fed is right now. And I think you point out 3 different rate cuts. The Fed has stopped reducing its balance sheet. In fact, it's begun to grow its balance sheet. So policy is relatively stimulus and certainly objectively more stimulus than it was planned to be this time last year. So I think the thing is, Wilf, is that the president, among other things, is a real estate person, and I've never, don't think, met a real estate person who thinks interest rates are low enough.
Mark, in terms of how you're kind of deciding which stocks to go with, is the Fed much less of an issue as it was, say, 6 months ago?
Well, I mean, as I said the last time I was on about a week and a half ago, right? I mean, 3 to 4 cuts, that's considered a mid-cycle adjustment. That's very bullish for stocks. Once you get the 5 cuts, it becomes a problem. That's kind of a recessionary-like scenario. I think it's very unlikely the Fed cuts again. There's really no reason for the Fed to cut right now. They've already fixed the yield curve. However, with inflation as low as it is, if there are problems, they do have some wiggle room here. So, I think right now, I think the markets are fine. The economy looks fine. There's no reason to cut again.
I do think if we get, the GDP tracking data now from the Atlanta and New York Feds are showing sub 1%. If that ends up being what fourth quarter GDP is, and they always do come back at the back half of a quarter, it'll be interesting to hear the commentary around that as to whether the Fed can actually declare victory and say we're on hold indefinitely.
All right. Steve Leisman, thank you. We're going to get back over to Bob Pisani for a look at today's biggest movers. Bob.
And the market wants to go up. Even with dubious trade talk news today, the market generally, the low prints right near the open, close near the highs for the day. That's been a trend all month long. The diversity, the stunning diversity of the rally is what really sticks out to me. We've been talking about healthcare stocks here. You look at your Humanitas, your WellCares hitting new highs, 52-week highs. The Medicare for All thread is greatly diminished in the last month. These stocks are all reflecting that. But elsewhere, just the stunning breadth of the rally. Home Depot in the home improvement space. This is a massive name that's up 40% so far this year. We've been talking about Walt Disney for a long time, one of the big consumer, but it's the same story. It's up almost 40% this year. Finally, the banks had a terrible time last year. JP Morgan, also another winner, consistently up about 35% this year. Guys, back to you.
Bob, thanks so much for that. Let's get to Mark for a final thought on the markets. Mark, Mark Moschini, sorry. What's your take from some of those comments that Bob just mentioned as to what can continue higher of those sort of stocks?
Well, I think as a group, one thing that is common amongst them is that they're iconic brands in their respective space, and investors have been kind of crowding into the things that have been working, and they've been working very well. That said, I also think it's interesting that some of those are more cyclical in nature than the defensives that have been leading the market really up until the month of October. That being, of course, utilities, real estate investment trusts, and consumer staples. So I think that is encouraging, and it speaks to the rotation that we've seen rather alarmingly since the beginning of October into this value-oriented subspace that includes things like industrials and financials. And I think that's a good sign. I mean, we've been teased like this before, only to see this be one big head fake. But I think given the setup around not only the firmness of domestic conditions, but finally now for the first time in about a year, firming global economic conditions, I think there's a backdrop for these cyclicals and their rally to be sustained into 2020.
We have a news alert. Just going to hit the pause button on that discussion. It's on the movie industry. Julia Boston has it for us. Hey, Julia.
Well, it's a big ruling from the Justice Department that could have a huge impact on movies' theatrical distribution and could spark consolidation. The Department of Justice's Antitrust Division is saying that it aims to terminate the settlements which prevented the movie studios from owning movie theaters. These were known as the Paramount Consent Decrees, and they came from a 1948 Supreme Court ruling. Antitrust Chief Macon Delrahim saying at a Bar Association conference today that the decrees are no longer needed. Now, Now, if you'll take a look at those stocks, AMC, IMAX, and Cinemark moving higher on this news, which could lead to these movie theater chains consolidations or to the sale of one of these companies or several of them to media companies. Now, that could lead to the closing of the 3-month window between theatrical and home entertainment releases. Certainly a fascinating area to watch. Morgan, back over to you.
Julia, could this have an effect on everything we've seen around protocols for awards as well?
Well, it's been really interesting, Morgan, that we've seen Netflix as sort of the prime example do a more limited theatrical release where it doesn't have access to all of the movie theater chains because they don't want to put movies on their screens that are going to be available for streaming either right away or a couple months later. What I think this will mean is, Netflix will continue to try to use its movies to get attention for the streaming product and also attention for its filmmakers. But what we could see is other studios do something similar to what Netflix is doing. So if there was a movie studio that said this film is not gonna have a 3-month run, it might do really well for a couple of weeks. Let's put it in a theater for 2 weeks and then make it available on streaming 2 weeks later. So we could see a real change here if one of the media giants does end up buying one of these theater chains.
Julia, thanks so much for that. I should mention as well, tomorrow on the closing bell, Makan Delrahim, the antitrust chief at the Department of Justice, will be joining us, so we'll be able to discuss that and, of course, very much more. Our thanks to Mark Tepper and Mark Lashini for joining us today for the Market Zone. Still to come, FedEx firing back at the New York Times after a story claims the shipping giant slashed its tax bill to zero without following through on its promise to spur growth. We'll get reaction from the reporter at the Times that broke that story.
Plus, we're launching a new series called Watch This Space to highlight investing opportunities in the space race. We've got a great lineup of guests all week on Closing Bell, starting with Mark Boggett coming up. We're back in 90 seconds.
There's CNBC.
At Lidl, we're big on all those Christmas parties. The season to be jolly. Try our Party Time Indian snack selection for only $2.99. And our Party Time mac and cheese bites for just $1.19. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores, excludes NI.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
Welcome back. FedEx at the center of controversy today after a New York Times story scrutinized the role that CEO Fred Smith played in lobbying for the 2017 tax cut bill. The story claims that despite FedEx now having a $0 tax bill, the company has not invested in its employees to the extent it had initially promised. CEO Fred Smith calling the report factually incorrect and saying, quote, "I hereby challenge A.G. Sulzberger, publisher of the New York Times and the business section editor, to a public debate in Washington, D.C." The New York Times, meantime, responding to Fred Smith's statement, saying, quote, "FedEx's colorful response does not actually challenge a single fact in our story." Joining us now is one of the reporters behind the story, Jim Tankersley, who covers economic and tax policy at the New York Times. We should also note that we reached out to FedEx, who said the CEO, Fred Smith, is not available for an interview. They also said, just to cross a couple of issues, Jim, first of all, that you claimed they paid zero tax in 2018 when they in fact say that they did pay some tax and that they notified you of that before the story went to print. Is that fair?
Well, no, what we said was that they owed zero tax in 2018. You can make tax payments in any year for lots of different reasons. We asked FedEx to explain to us exactly how much they paid and owed in taxes in 2018, in 2019, in 2017. We gave them a long and detailed list of questions months ago. They never responded to any of those detailed questions, and we stand by all the facts in our story.
On the headline, Jim, ultimately, should the person that is responsible to answer questions on the benefits and pitfalls of the tax cut be the politicians that enacted it, or business leaders that ultimately have a duty to serve their shareholders as best they can?
Well, I think it's a wonderful question. I think that we have a responsibility to hold both politicians accountable for the promises they make and the supporters of politicians accountable for the promises they make to help sell policy changes. And in this particular case, the promise was very clear that a cut in the corporate tax rate would lead to an immediate and sustained boost in business investment in the United States. We have not seen that. We have not seen anywhere close to that. What we have seen is essentially slower growth in investment post-tax cuts under President Trump than pre-tax cuts under President Trump.
Jim, FedEx is a very specific story. Obviously, they've had a lot of issues in Europe with their TNT acquisition and how that's rolled out, especially on the heels of a cyber attack. They have a lot of exposure in Asia, so all of the U.S.-China trade back and forth has impacted them a lot as well. When you looked through the numbers, how much of this was FedEx specific versus some of the other companies that might be in similar positions, for example, UPS?
Well, sure. Another great question. FedEx is entirely indicative of the investment response that we've seen overall from companies. In fact, there's more than 36 companies, I believe, that zeroed out their tax liability after the cuts per our analysis. But we have not seen any. We did a regression analysis of size of tax cut versus amount of increase of investment and found no relationship. And if anything, there was a weak relationship in the inverse, that companies that got smaller size tax cuts had slightly more increases in investment.
I guess, Jim, some of the points you make are clearly on the surface seem to suggest your thesis is correct, but companies don't make their capital spending decisions on a year-by-year or month-by-month basis. And is it fair to say that the real definitive answer to this question won't be known for a couple more years?
Oh, absolutely. I think that we will keep writing stories over and over about what these analyses tell us. If you had just taken the investment response from the first quarter after the tax bill passed, you would have had a very different story. And I would like to point out that is something that many Republicans did. When the investment surge happened, they started to cheer and say, look, see, the tax bill is working. So now, we're a couple years into it. That story has changed. There is a real possibility that economists raise that over time, that lower tax cost will encourage more investment. And if that happens, we'll absolutely report that too.
Jim, were you surprised to see the response from Fred Smith?
I think it's the first time in my career that anyone has ever challenged my boss to a debate over a story I wrote. That was different.
I mean, I would love to see it. I'm not sure the wider public would, but a tax that I think it's very New York Times business section and CNBC specific. I think it'd be a great debate. I hope you successfully, Jim, trigger it.
I would love to, if nothing else, get an interview with any of the FedEx executives that we asked for comment on this, because I would love to learn more about how they, see the effects of the law on their taxes.
Jim, thanks for joining us. Great story.
Thank you.
Up next, here on Closing Bell, we'll break down the charts to see if investors chasing record highs for the market are starting to get overconfident.
Plus, we are kicking off our week-long special, Watch This Space. Coming up, you will hear from a top venture capitalist in the space investing industry to find out where he sees the biggest opportunities in the final frontier.
Tomorrow is just waiting to be.
Next. Nah. Nope. Boring. If you skip through loads of your TV channels, why are you paying loads of money for them? With TalkTalk TV and Faster Fibre, you can access the nation's favourite TV shows, a world of films and sport, live and on demand, all for £25.95 a month for 18 months. And if you're quick, you'll even get a year of Amazon Prime on us. Search TalkTalk TV. TalkTalk. For everyone. Offer ends 5th of December, subject to availability. T's and C's apply.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night! And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
Far wing elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
Sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Welcome back. Let's send it over to Mike Santoli for his third dashboard of the day. Mike.
Morgan, investors were pretty frightened back in August and September, but they are definitely unafraid for the moment. If you look at ways to track the sentiment, investor positioning, Deutsche Bank has sort of a composite look at this. This shows equity exposure based on fund flows, based on professional investor positioning with regard to futures and all the rest of it. So obviously this is going to oscillate up and down around an average. This is a very important peak. That's that early 2018 peak. That was really the closest we've come to sheer universal exuberance in this whole bull market. And right here you see it's getting up there. I wouldn't say that it's yet extreme, but we seem to be in some kind of a range where we're capped roughly around this 0.8 level. Now, it doesn't mean the market can't trudge higher, continue higher as things get better, or for that matter, the fact that even if this goes down a little bit, it still probably can be okay, because you see we sort of existed there for most of 2017 when the market was strong. Also, 2014 was an up year as well. But it seems like I think a lot of folks have already done a little bit of their chasing as this market is taken off.
Is it the direction of travel of this line that makes the most difference as opposed to the absolute level?
I think the magnitude matters as well, but it does sort of build over time. It's a little bit of a cumulative measure. So how far it's run usually tells you how long it's been running that way.
Mike, thank you, as always.
Up next, watch this space. A top investor in space technology tells us about the latest trends emerging in this fast-growing industry.
Plus, a new study may be forcing the medical community to rethink heart health. We will discuss the impact that could have on medical device makers later here on Closing Bell.
Do you have concerns about mild memory loss related to...
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
On the goal line, Martin scores and takes it home.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores.
And you can hear the action live on TuneIn Premium.
Move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
What if, instead of browsing the World Wide Web, we were all browsing GopherNet?
Gopher is easy to navigate and easy to browse.
Because in the early 90s,
Gopher was taking off faster.
Until they made one crucial mistake.
At that point, Gopher traffic on the internet dropped off.
Find out why open source won the battle for the internet next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn, with live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
It's time for a CNBC News Update with Bill Griffith. Hey, Bill.
Definitely a music upgrade since I was there, Wilf. Here's what's happening at this hour. An airstrike has slammed into a biscuit factory in Tripoli, killing at least 7 people in what the UN envoy there said could be a war crime. The airstrike also wounded at least 33 workers who were taken to nearby hospitals for urgent treatment. Back here, Senate Majority Leader Mitch McConnell said today the House's impeachment inquiry against President Trump is likely to continue until Christmas, but he added that he is pretty confident the president will not be removed from office.
I can't imagine a scenario under which President Trump would be removed from office with 67 votes in the Senate. So I don't know how long senators will want to continue the trial, but I'm pretty confident at the end the impeachment will not lead to ouster.
And finally, happy news. Taylor Swift will perform on the American Music Awards this Sunday after all, following a public spat with the Big Machine label group, which owns the master rights to her older material. The company reached a licensing agreement with the singer, so she gets to sing on Sunday. And I'm dearly hoping that she sings one of her old country hits. The title is I'm Only Me When I'm With You.
There we go.
One of the big ones.
Bill, I want to go back to what you said at the top. Did you actually get to pick the songs? Because whenever I come up with a request, it's always roundly rejected.
Yes, no, clearly I didn't get to pick the music. I don't know who
anyway,
did, but yeah.
It's always one of the brilliant team. Bill, thank you.
Have a lovely afternoon.
You too. Surprising results in a new stent study could change the way doctors treat heart disease and impact medical device makers.
Plus, Google is set to launch its cloud-based video gaming service tomorrow. Find out whether this will be able to compete in that crowded industry. That's later on Closing Bell.
Coffee shop, cashback, cat flaps, cashback, beanbags, rucksack, hire car, buy a car, flapjack, cashback, dumbbells, cashback, takeaway, holiday to anywhere the sun is at, bum bag, laptop, big match, hatchback, binge watching, paintballing, crab fishing, cashback, anything you want to buy, everywhere you want to go. Guess what? Cashback. Whatever you spend your money on, get money back every time with the American Express Platinum Cashback Everyday Credit Card. Search Amex Cashback. Representative 22.9% APR variable. Minimum annual spend to receive cashback. Terms apply. 18 plus subject to approval.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Along the goal line, Martin
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
The move, and a shot, and he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Couldn't. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Welcome back to Closing Bell. Investments in the space technology industry skyrocketing this year. The latest data from Seraphim Capital shows total investment in its Seraphim Space Index grew by 37% year over year between October 2018 and September 2019. I spoke with United Launch Alliance CEO Tory Bruno back in September about the VC investment boom in the sector and whether he sees this as a lasting trend. Take a listen.
I think it's super exciting that VCs are interested in space and that they've been putting money into it. Many of them are not sophisticated about space or our industry, and I believe most of the investment that's gone in will eventually be destroyed. There's way too many startup companies, especially in the launch world, in small launch in particular, relative to the amount of demand that there will be for going to space. ULA is a mature company. So our revenues pay all of our bills and our returns to our owners. And we're able to do everything you're seeing here within that kind of mature business model that will be really insensitive or unaffected by when the VCs are finally done and move on to the next big thing.
ULA is the result of a joint venture between Boeing and Lockheed Martin. It was formed back in 2006 after the last big satellite boom that was expected in the late 90s and never really materialized and actually led to something of a collapse in the launch market back then. But joining us now for more is Mark Boggett, CEO of Seraphim Capital. Mark, thanks for joining us today.
Good evening.
I want to get your response to Tory Bruno's comments just now, and I guess in terms of context, why perhaps he's wrong, given the fact that you are making investments in this space.
Well, indeed, there are now nearly 150 companies that have raised venture capital funding in the launch segment. And I actually tend to agree with him. I think that there are too many companies that are being invested, and it's highly likely that the majority of them will fail. But I still think they will be left with 3, 4, 5, 6 venture-backed launch companies that will go on to succeed.
Now, Mark, investing in space at CNBC.com, I would point viewers towards some of the articles written by my colleague Michael Sheets there. But the way he breaks this down is there's really 4 main categories: human spaceflight, national security, satellite communications, and imagery and data analysis. Where do you see the greatest opportunity for investment right now, and how would you be going about it?
Yeah, we see the opportunity in the imagery and analysis. We believe that, our thesis as a fund is that the size of satellites, the cost and weight of them has fallen to a level where satellites with significant functionality can be launched for between $100,000 and $1 million per satellite. So the traditional satellites costing $300, $400, $500 million, the smaller satellites enable you to build a much bigger constellation. And it's the big constellations that we believe where the value is, because they can bring data to almost real time, or indeed real time. We think it's the real time nature of this data that's going to create a lot of
big new market opportunities in a very broad range of end verticals, such as the insurance market, the maritime market, through to the retail, construction, oil and gas. And we believe that there are billion-dollar opportunities to use this close to real-time data in a broad range of these end markets, and that's where the opportunity lies.
Mark, we speak a lot on this channel in the last 6 months or so about the valuations that we saw in the broader venture capital market, the private market, and clearly stories like Uber and WeWork highlighted how some of those have become stretched. What's it like in your subsector of the VC market, in the space sector? Are all the companies you're invested in still loss-making? Are some of them already profitable? Do you ever fear that valuations are a little steep?
Yeah, so the majority of the companies that are in new space are still at the stage that they're unprofitable. The market leaders, the emerging leaders within the market, are still growing to that profitable stage. Valuations are subject to supply and demand. So the sectors where there's a significant amount of interest, such as launch and such as the constellations, the new constellations, these are the areas that can see significant valuation and significant increases in valuation as they're being chased by investors. Well, we believe that there's a lot of value in the downstream end of the market. This is the end of the market where there's the data analytics of this huge amount of unstructured data, and then the opportunities to use that data in these end verticals I've talked about. That side of the market, the valuations are still very attractive. Likewise, the downlink subsection. So this is the market where it's taking the data down from space, down to the ground, and doing that reliably, doing it with ever greater volumes, and doing that cyber securely. This is a really underinvested market, and there's some fantastic valuations in this particular market. So it depends where you're looking within the overall market.
So, Mark, we're starting to see some public market opportunities for investors right now. Virgin Galactic perhaps being the most high profile, having gone public here at the New York Stock Exchange as the first commercial human spaceflight company. But in general, when you look at these new breeds, these new startups of space companies, how can investors get involved?
Like many of the technology sectors, companies are staying private for longer. So we don't see a huge rush of these new space companies coming to the market anytime soon. So really the way to play this market at the moment in order to get into the earlier stage venture opportunities that form the majority of the market is through venture funds like ours. There's several space-focused venture funds that can provide private investors an exposure to this market. There's only a limited number of quoted new space companies, with Virgin Galactic being the latest to join the market with a greater than $1 billion valuation, so some liquidity. Most of them are pretty small companies at this stage.
So, Mark, given all of the different companies that your fund is invested in right now, what are you most excited about? Are there specific names?
Yeah, so a range of the constellation companies that we've invested in are really exciting at the moment. So one of our portfolio companies is a company called Spire Global. So this is a company that has miniaturized small sats in order to collect data about the weather. Most of the weather is formed in the oceans, and this company has the largest constellation of weather satellites in the world. Currently has more than 100 satellites in orbit, and through those satellites it collects twice as much data as all of the governments in the world added together. And this company believes that more data will lead to them having more accurate weather forecasts, and we believe that there's a huge value in that accuracy of those weather forecasts. Weather's a $5 billion market, and we believe this company has a great opportunity to say a significant proportion of that market. They're looking to actually IPO next year. They're one of the leading companies in this market.
Well, Mark, thanks so much for joining us. Much appreciated. We've got a news alert on Uber. Frank Holland has the details. Frank.
Hey there. Well, another top-level Uber executive now announcing that he's leaving the rideshare company. Today, Chief Product Officer Manik Gupta announcing his last day will be on December 13th. According to TechCrunch, Gupta wrote a note to the product team saying, in part, after a few discussions with Dara, referring to the Uber CEO, as well as with my family, and now that we've made it through the IPO and an important year for the company, I've made the tough decision to leave Uber. Gupta joined Uber from Google in 2015. He became the chief product officer just last year. And again, he's the latest Uber executive to leave the company. Uber's COO left the company in June. Back over to you.
Frank Holland, thank you.
Thank you.
Up next, retail results on deck. Home Depot, Kohl's, and TJX are all reporting earnings tomorrow. The key things to watch ahead.
And coming up on Fast Money, President Trump's former national economic advisor Gary Cohn will join in an exclusive interview about his latest venture, as well as Trump taxes and his thoughts on the 2020 race.
This CNBC program is...
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
On the goal line, Martin scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
The good snap, the ball put down, the right-footed kick is up, it's got the distance, it's accurate enough, it is good! The hand off to Carson, slithers through the crease between the guard and the center.
Tonight, TuneIn has your Monday night NFL football with the Kansas City Chiefs at the Los Angeles Chargers. Kickoff at 8:15 p.m. Eastern.
He lost one in the end zone, it's a diving one-hand catch, the tight end in the back of the end zone!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Welcome back. According to a new study, there are limited benefits to stents and coronary artery bypass surgeries in the treatment of heart disease. Meg Terrell's got the story for us. Hi, Meg.
Hey, well, this is for patients with what's known as chronic or stable heart disease. Millions of Americans who may have a blocked artery but who aren't experiencing immediate issues. Now, the study looked at whether implanting stents or undergoing bypass surgery work better than medicine and lifestyle changes to prevent events like heart attack. And they found they didn't. The study did show that for patients with chest pain, the more invasive procedures provided greater relief. Now, investors in the big three cardiology device companies, Boston Scientific, Medtronic, and Abbott Labs, were closely watching the results. Cowen analyst Josh Jennings told us that many were fearing the study may actually show stents led to worse outcomes. So the results that they were just no better and in fact helped with chest pain guys were a positive. And you don't necessarily see that reflected in those stock prices, but many were worrying it could be a lot worse.
Well, sorry, people were